Alright, today will be my, I guess this will be my market review for November 5th, 2025. I already have some things outlined. Just review this before we get too far into anything. So this is just what I have from when I was looking at price this morning, but I'm going to go ahead and clear everything off as the usual and just sort of dissect things and build it up one at a time. So, first things first, always check the news on Wednesday for today. We have ISM, PMI. You don't have to say the ISM, it's just the PMI. But we have PMI at 10 o'clock, which, hindsight, it's like somewhere right in here. No, it's not. It's somewhere right down in here. It was really horrible. That's all I know to say. I saw it on the 1 minute, so the 1 minute candle is weird, but yeah, it did nothing. It was a little concerning because we did take like yesterday's PM session highs with it, so I thought we could potentially be bearish, but I'll explain everything in good detail. I did not trade today. I could have, but my setup presented itself as soon as the market opened, um, and I had to give a presentation today, so couldn't trade it. But I'd say there's an 80% chance I would have taken that trade just because the stop loss was so small on it, and I'll show that in just a second. But first things first, just to walk through what we're looking for, check the news. So we have 10 a.m. news, so we need to be out of the market by about 9:50. If we still have a trade going and we're nearing that high, it's best to just close it. If we're trading long, that would be. But immediately, if theoretically you were hopping on at about 9:20, so you're looking at something like this, you see that we were able to take these highs, and right now we're working in this price leg right here. So on this price leg, we recognize that prior to the formation, we took London lows, which, if you really get particular, is an accumulation zone. And then we fleshed out its lows, tapping into a gap down here. Okay, so you want to just kind of look at what you see before you start going too much into the higher time frames. Alright, we're tapping into a 1 hour gap. Wait, yeah, this is right. Tapping into a 1 hour gap right here. Okay, 1 hour bullish fair value gap. So I'll go ahead and outline that. Let's go ahead and okay, so this was also, it's important to acknowledge the time that this was formed. So this fair value gap was formed inside of London session. Well, or like in the accumulation range of the London session. So we know that in the market maker buy model, which is what we're currently in the buy portion of the market maker buy model, we always see price return to the accumulation, at least the upper end of the range of it. So at the minimum, we would have wanted to see price tap into, for an entry that is, it doesn't always have to return to the accumulation for it to still be a valid model, but we wanted to see it tap into these relative equal highs again before it went higher, but we ended up seeing that it sought all the way past equilibrium of this price range before we surged higher. So very obvious that we're looking for longs as well. Yesterday we sold off a ton, sold completely inverse the new week opening gap, and then we repeatedly just did the same thing again today, except we just inversed it bullishly. So that's a little something to note, but that's all for tomorrow's trading. I'll just talk about what I saw today. So going to the daily now to kind of see what we're expecting. I can't remember what exactly the candlestick was. There was a little small volume imbalance right here that hadn't been traded into, and I think we were still down here. So basically, we went on a ton of discovery. And in the beginning, you saw that I had this volume imbalance outlined right here. I talked about this yesterday, but it's pretty likely that we would seek this volume imbalance just because this is the farthest inefficiency left untouched. And for us to truly give, a reaction higher, we'd want to see something like this. Tap into the upper end of that range, and then just surge higher, and that's exactly what happened. I also said that this order block right here was, this price point is as sensitive as we were willing to get before we surged higher. So I'm pretty much going to tell you that unless we totally dump overnight, tomorrow will be a bullish day as well. Also, depending on where we close, we may see a bullish day, at least in the first part of the morning, finishing off this leg, and then filling this inefficiency right here. Just going to outline that really quick. Let's just say we close somewhere like, let's just say we close right where it's at, had this inefficiency, we'll trade down to the night, and then, maybe trade up a little bit. London sits right here, we wick out London, and then we go up into this inefficiency. And then that's how we would target that. But that's kind of besides the point. And past successes don't always equal future results. But on the daily, we can see that we were super bearish yesterday, closed very bearish in the middle of the new week opening gap from 2 weeks ago. This was the biggest new week opening gap that I've ever seen personally, so let's just outline it here. It's, it literally is almost 200 points, so we're kind of expecting it to want to hold price for a little bit and just make sure this area is really well priced, as people didn't get to trade in it at all. And that's kind of, if I was, a market maker and I was the algorithm, I would want this price to get really fleshed out. So the fact that we tapped into this range and then propulsed so aggressively is great. And it pretty much means that we're probably looking higher now. We can't make any, grandiose statements, but if I was looking at this, I would say this is the accumulation, this is the manipulation. And then we could now be seeing the distribution. But essentially, I would look for us to tap into this and go higher, with the manipulation being up, but us just like the distribution not being to the downside, if that makes a little bit more sense. That's just how I kind of look at it. Just because we're so bullish, just a little food for thought. But now that we've confirmed, on the daily, we've tapped into this. I don't know what time that low was formed, but it definitely was formed probably during Asia. Yeah, formed during Asia. Tapping into that. It's a session low. It's formed at a great time. Since we already took out London, we now need to be looking higher. The liquidity is higher now, with the minimum being us taking London. But the thing is, we're not going to take out the lower range of London to take the upper range of London. Whenever this low we've inversed all of these gaps on the 15-minute, which I'm sure is like an hourly gap, 100% in here. This is now like essentially a BPR, tap off the balanced price range, which is an hourly fair value gap here, and then, we're driving up. So now that we kind of have a narrative established, we're going to go to the 1 hour and look for potential targets. So on the 1 hour, we have targets, okay, which I'll need to outline as the buy side. This is an order block, a bearish order block. So, we're looking for some resistance here. I'm just outlining this prior to this all happening, but we've dug almost completely through this order block. So at this low this high, if this high gets taken, we're definitely looking bearish because we've inversed all of this with some velocity. So I'm going to now move to the 4 hour and see what we can see here. So the next thing of note is that we have a 4 hour gap sitting right here. You always include the volume imbalance. I'll also keep the middle line on this as well. So this fair value gap right here, this bearish fair value gap, is going to throw you off because it is essentially in the perfect location for us to hit it and then stab lower. Alright, but our narrative on the daily time chart, which the 4 hour always gives away to, is, oh wait, look at all this price. Look at what we've hit. Alright, this is our dot bias. It's going to be bullish. And then it's risk off because we have the fair value gap up here. So because that fair value gap exists, we're careful. Alright, but the second we see this inversed, we can add to our position if we're already long. Alright, so this 4 hour gap is something to be wary of, but it's not something to totally let, sway you. Alright, so now I'm just going to look for some more 4 hour gap stuff. Just make sure we didn't miss anything. Well, I didn't miss anything. And we're looking good. So else? Now we've confirmed our high time frame bias, which is bullish, and now we're just looking for something to confirm our setup. So tapping into this order block, you kind of see how we just we tap, go to consolidation, right? There's no gap here on the 5 minute, but on the 1 minute there probably is somewhere. Tap that gap, go higher, consolidate, accumulate, manipulate, distribute, right? Well, essentially, this is not a distribution. This is the manipulate, and then this is a leg up that begins the distribution, 9:30. So we manipulate lower, give us a chance to accumulate longs in this gap here. Also at the other side of this accumulation, because we broke this range, tapping back into the range, and now we send it higher. So if I'm sitting here during the open, what I'm seeing is in the 5 minute whipsaw, right? All of that is just horrible. However, we have this 1 hour gap. So the second we see us immediately trade up, tap the consequent encroachment of this 4 hour fair value gap, move lower. Now we're looking to see how we respect this 1 hour gap. So we're moving into the 1 minute, okay? It's okay to grade this, but you're not going to get to see what, you want. This is not perfect precision by any means, but what you will see is that, and I did grade this at the time, we're kind of hovering around the consequent encroachment, but only the wicks are falling below the 25% level. So very notable there. We also tap back into the upper end of the fair value gap before taking off. But now we're on the 1 minute, and we're looking to see how are we respecting this, okay? How are we respecting this gap? Tap into the gap, drive up, right? So what do we know so far? Traded up, manipulated, took London lows, traded up into the fair value gap, held the fair value gap, okay, after taking London highs, but, alright, so you gotta be nervous here. 1 hour gap, so we have bearish momentum right now. 1 hour gap, how are we respecting it? Oh, look. Bearish gap right here. Bearish gap, insane displacement through, okay? Displacement up, internal high taken, boom, right? Wick up, hit the consequent encroachment, trade back down into the bullish fair value gap, trade below the bullish fair value gap, alright, trade below this gap, just fall short of the gap here, displacement back up through it, reclaimed fair value gap. We see that both these candlesticks respected displacement above, these two highs right here, which are not even really highs. This is like a little intermediate term high, sort of. We've now inversed it twice. Unfinished business at this high up here. For us to, I guess this would be a market structure shift. It's not a break of structure until we go above this. And we go higher. So, really bad job of explaining that. But you have to be, the only thing is, you're watching to see what price is doing with this 4 hour gap. Which you will notice, alright, and this is amazing tool, is on the gradient levels of this gap, which I've kind of done a poor job explaining everything so far. We trade above the 75% level with the bodies, alright? Whenever we're looking for 1 minute entries, the confluences are, don't go in the last quadrant, okay? So, if I draw this from bottom to top, really, which is as it should have been done, don't let it go into that 25% level on a bearish fair value gap and 75% level on a bullish fair value gap. So what's notable about that is we offered lots of premium price in a discount array. That's not good. Alright, we're giving them lots of time to accumulate orders right here. Giving lots of people the opportunity to go long. To go short. That's not a sign of a strong trend, alright? When you grade this fair value gap, alright, right after the open, we still see that this bottom quadrant, alright, has no bodies traded inside of it. On the 1 minute, we disrespect a bearish PD array, respect a bullish PD array, sort of. This order block right, is also respected. All right, so essentially, you can flesh this out with probably a 2-minute gap, and then it looks right. Oh, I don't have that. I don't have that luxury, so go back to the 1 minute order block, and then we set it higher. So because this offered premium prices for so long, you kind of discredit the fact that we're going anywhere important. You also need to take into consideration we are rebounding off of the hourly gap down in Asia. There's no liquidity apart from here, and this is very high resistance. High resistance because no real lows of any importance apart from this one, and then a gap down here, right? We're not touching this because we already took London lows. You're not going to go liquidity sweep, stop run, and then slam it lower. Slam it lower. It just wouldn't be like that. It's hard to explain, but I'm not a teacher. But anyways, we drop into this 1 hour gap. After rebounding off there, so that's 2 higher time frame PD arrays respected. Now, it's really just a matter of what you feel comfortable entering on. So, in what I like to call the entry tree, your first entry is off of the 1 hour gap, refusing to have, off the 1 hour gap getting displaced. Okay? That's your first entry. If you were in a perfect world, you would enter right here. The second entry, alright, would be at the inversion of this gap. With a strong close above it, with a body of a candlestick on the same time frame, of course. Strong displacement above, and then the next entry, which is, this one's largely up to option, so I'm not going to really consider this one, but would be that failing to take this high. This is the 2022 model. Alright, we move in, fill an inefficiency or take liquidity on the higher time frame, move up, unfinished business at a recent high, which is important because it's the beginning. Technically, at the time, this is the New York AM high. Alright, large wick, trade back down in. Now this is where you would get nervous. Alright, but your stop is down here for a reason. But when this bullish or value gap doesn't get respected, you immediately look for the order block. If the order block gets trade below mean threshold, which is, if you grade this range, you grade the bottom of this wick, okay? If it goes below consequent encroachment of that level, which obviously see it got nowhere near, it actually respected the upper quadrant perfectly. But if it goes below mean threshold, you close your trade. Alright, you don't move your stop loss there. But if you see a body close below that, you close your trade because you're wrong, and it's going to do some more discovery down here, and then you can look to go long again. But anyways, you would add here, and then you would add the second that these lows got broken over top of, and then you would ride it up to these pre-market highs where they accumulated shorts earlier with all these stops resting right there. But of course, it depends on how much you're willing to ride out this range. So let's just say you did enter. All right, let me remove these. And then you're looking for profit targets. You now have, let's just say 6 contracts. Take 3 off right here. You leave 3 on. Okay. Now what you do is you go out to the 15-minute. Alright, so what you do is you grade all of this price range. Right here to right here. If this is a retracement and we are going lower, you will not see the 79%. So 79% is somewhere like right in here, probably. You won't see it get traded past. It's possible, but you don't really want to see it. We've already traded so close. We're taking this. We're flipping bearish. We're flipping bullish again. So if you go out on this price leg, which is all of this, right? So really, I don't know if I consider this right here, but I would probably consider this. Look at where we stopped. 75%. That low was formed on the 75% level in a volume imbalance. Look for the projection. So let me go ahead and flip this fib, and let me show you another thing. if you use standard deviations, which is a good tool. Now, if you look at this, the projection on this is crazy. It essentially, on a standard deviation, you would essentially think that it could reach right here. Price may very well reach all the way up in here within the next week. So pretty bullish, pretty bullish. But it just depends on what we do overnight. Also depends on any news. Trump spoke today at 1. I didn't really look and see what that did at all, but just a little recap. Thought this would be good to explain what trade I would have taken today. It wasn't perfectly explained, but so many confluences that we were going to be bullish today. Literally absurd. Very, very, very nice. So I wish I wouldn't have had to miss today because of that presentation that I had in my class, but you know, I only have my 9 a.m. once a week, so you can't win them all. But anyways, yeah, this is not financial advice or anything, but I think that this should do a pretty decent job as to explaining my thought process on the market, simply just a review. But if anybody did watch this, you know, thank you for watching, and good trading.